Hello my dear students, welcome back to the classroom. So today's topic is all about the errors and frauds. Error and fraud, what is the difference? Aren't they the same thing? No, there is a difference. So what is the difference? Let me tell you. When it comes to errors is particularly known as a mistake which has been committed. So mistake might have been committed with your innocence. Yes, how many of you have seen Three Idiots? Dekhiye? Okay, we do have people from South India as well. So a lot of times what happens is that your mom has given you a particular task. Right? What is the task? It's summers and you have been given a task to refill your water bottles. Right? So this is the same task which has been assigned to student every time. Now you have been given a task. Now after that, you were so much engaged with your studies, your exams were approaching, and you were so much busy that you forget. Let me repeat, that you forget. So you have done that intentionally or that happened by mistake? That happened by mistake. Exactly. That happened by mistake. So I was now moving on to next, let me give you one more example. That I was teaching you something else and suddenly what happened, I got a call in between. After attending that call, when I came back, I taught you something else. So I have done that intentionally or that was in an innocent manner. That was done into an innocent manner. Yes. Whenever a particular task is done or that turns out to be something else or a mistake has occurred, that occurs just due to innocence. But when it comes to fraud is every time when I used to do that intentionally. So what does this intentionally means? I'm already committed, but I do have an affair as well. So what is this? I'm trying to cheat someone. So you guys said, sir, your shirt looks really nice. From where did you got this? Oh well, I got this from Armani, right? Armani, sir, yes. But I got this from roadside. Yes. वो पटरी लगी थी ना 150. From there I got this. So what is this? I am trying to present something. I am trying to basically hide the fact, and I have presented you something else. So this was an innocent manner, or I have done that intentionally. So you have done that intentionally. That means I am fraud. Got it? Understood my point? Yes, please. Understood my point now? Now moving on to next, let me tell you a few more things about this. So when it comes to accounts, when it comes to basically auditing, we do have a couple of things which are associated over there. When it comes to errors are every time which are committed that you will basically every entry in accounts do have double aspects, which you call it as double entry system. So it is going to have a double aspect, debit and credit. Then so you were doing an entry. After doing the debit, you forget, or by mistake you suddenly got a call, and after that you forget that you have to make the credit entry as well. Right? Now moving on to next. Fraud is something which is done intentionally, that a person went to your supplier, he has given him a payment of 1 lakh rupees, but into books and to vouchers he has done an editing and made it for 10 lakh rupees. So what was the actual reality? The actual reality was of 1 lakh rupees only. But when it comes to the thing which has been presented, that was 10 lakh rupees. Whenever you basically lie to someone, that is fraud. Got it? Yes, please. Now moving on to next, talking about the next topic, we are on to the same chapter, that is auditing basic concepts. Now talking about rest of the things, that is that first of all we are going to, okay, let me give you a difference between among both of them. It is errors and then it's fraud. Right. So error is particularly talking about the definition. So let me tell you, when it comes to this basis part, every student a lot of times feels like that sir, I am unable to remind the basis part. Okay, let me tell you that how this will turn out to be easy for you. Let me remove this. Now you guys are going to tell me that what we are going to write into basis. Okay, so errors means may be defined as, an error may be defined as an unintentional mistake, defined as an unintentional mistake or misdescription in books of accounts. In books of accounts. Misdescription in books of accounts or records. This misdescription or this error can be done by, the very first point is clerical or arithmetic mistake, arithmetical mistake. This can be a calculation mistake as well, or a clerical mistake, that you were basically doing some kind of calculations, and after that you were supposed to do like that 199.5 into 20%. So you have done that manually and an error occurred. So that person was not doing that intentionally, that just happened by mistake. Okay, misinterpretation of facts, misinterpretation of facts. You understood something in a wrong manner. How that can be done? You were ordered to make a payment to the supplier. You were said that we have placed an order with the supplier. Please look into it. You thought that I just said that you need to place an order with the supplier. So it's all about the misinterpretation of facts, right? Or misapplication of accounting policies. Okay, leave it. We are not going to write this much. This is just a difference between. Now, talking about the next point. What is fraud? Fraud is defined as an, may be defined as an, fraud may be defined, just give me a moment, may be defined as an intentional act by one or more individual, by one or more individuals among management, charged with employees or third parties to obtain unjust or illegal advantage. So this happens over there. That what is over there? There was a person who was charged. Over here I have used a word charge. What does this mean? This does not mean that how much your smartphone is charged, right? This means that this person was authorized. This person was authorized by the company to deal with third parties, or to deal with employee. While dealing with employee was over there at a remuneration of 1 lakh rupees per month. But he was showing into books of accounts. That he has been added on 2 lakh rupees. So what was that? That was fraud. That was totally a fraud. Right? So what is this? What we have written over here? So you have just written the definitions. Look over. It is defined. It's definitions now. So can you make the basis as definitions? So you have to write the points which you remember, and after that you are going to write down the basis of differentiation of the difference among both of them. Got my point? Now moving on to next. Please pause. Yes. So the next is errors may occur. Due to ignorance or in advertenance. Advertenance. That means innocence. That might be due to you have just ignored it, or else you were innocent. Into your innocent manner, they might have occurred. But fraud is an intentional error. It is done intentionally. Intentional error. It involves willful misrepresentation. It involves willful misrepresentation. Willful misrepresentation of material act or failure to disclose material act. Failure to disclose material act. So fraud is, and what is basically the intention or the occurrence? The intention over here is ignorance. Why this happened? What is the occurrence? The basis can be something which is common between both of them. So this can be occurrence, or this can be intention. There is no such intention when it comes to errors. When it comes to fraud, there is totally an intention. So now moving on to next. After that, I will give you guys a lot of examples about this. Right? So there are so many types of errors. So you can write it as errors can be detected. Errors can be. If you have done an error while doing your final accounts question, you will immediately come to know about it because the balance sheet is not going to match. After that, what will happen? After what you guys are going to do? Sir, we are going to forcefully match the balance sheet. Yes, we are forcefully going to match the balance sheet. Oh, it's the difference of 15,500 now. Let me add 15,500. Let my balance sheet make the balance sheet in a tally format. So that both of the things, asset and liability, they should match. For that, I am ready to do anything now. Errors can be detected. It's detected on careful scrutiny of accounts. On careful scrutiny of accounts, right? If you are doing a scrutiny, that means that is efficient enough, you will come to know about the errors. So, but when it comes to fraud is something that you have to detect. These can be detected by due care. These can be detected by due care and diligence. Diligence on part of auditor. On auditor plus proper due diligence. Plus proper due diligence. That means you have to look after each and every point. That because in that case, if the 10,000 out of this 1 lakh, 10 lakh payment has been made, that would have subsequently reduced the balance into your bank account and your cash and cash equivalents as well. But what is going to be over there? You have to look after each and everything very properly. There should be a proper due diligence, and there should be everything will be handled with due care, right? So it is all about that how you are going to detect. So this was all about detection. So the basis is going to be detection. So please remember that you are not going to write on the basis of these two things. You are not going to do that. How you are going to do that? That on the basis of these 2 points, what is common, you are going to make that a basis. That is really simple. That is simple enough. Okay, should I go ahead? Now should I give you some examples as well? If this is turning out to be like that, you are able to understand. Okay, so let me give you some types. Talking about types of errors, that can be errors, clerical errors, errors of duplication, that a duplicate entry was paused by mistake, errors of duplication, and after that compensating errors, Now, what was over there, which was a fraud? Fraud can be so many things. Fraud can be misappropriation of cash. Misappropriation of cash. That means cash was implied. Misappropriation of cash. That means cash was used at some of the places which were not known. You were saying that yes, I have taken the cash from that person that was amounting to 1 lakh, but that cash was 5 lakh rupees. So that is misapplication of cash. You were ordered from your company to pay rupees 2 lakh to the concerned person. You have not paid them. Right? Misapplication. Now the next is misappropriation of goods. Misappropriation of goods. But that should be done intentionally. Misappropriation of goods, misappropriation of cash, and after that, forgery of vouchers. Forgery of vouchers. After that, services rendered but not accounted for. Services rendered but not accounted for. But not accounted for. Now moving on to next, or else it is window dressing. Or else it is window dressing. When it comes to window dressing, what is that? Window dressing is that things are something different, but you are showing them as they are something positive. You are showing negative things as the positive ones. Getting my point? Now moving on to next, there are so many types of errors. If I talk about errors now, there are so many types of errors. So types of errors. What are the different kind of errors which you will find during auditing? Right? So the very first kind of error is self-revealing error. This self-relieving error refers to errors which becomes apparent during the course of account preparation. The course of accounts preparation. So if I talk about a check, the check was basically issued, but that got omitted. While preparing the bank reconciliation statement, you guys will immediately come to know about that yes, this check was over there. So you will immediately come to know about that yes, this check was issued, but that has not been encashed. So you will come to know about such kind of things which are self-revealing. You will immediately come to know about that yes, this is missing. Right? Self-revealing. So the next is non-self-revealing error. Now what does this refers to? This refers to errors which do not reveal themselves during course of accounting preparation. Account preparation. So this reminds me still that when I used to study there at my home. So what happens that mom has given me a particular task. By the time, let us suppose that she went to market. After some time, when she is going to come back, once she will be back, then immediately she is going to recognize, you have not refilled the water bottles. Na? So that is something which can be revealed, which is apparent there too. One can easily find out. The next thing is like, once she will be like, she has given me a task that you need to have particularly your lunch on time. I have not taken my lunch. I do not have my lunch. And after that, I have given that my lunch to cow itself. So that is not self-revealing. That cannot be revealed on its own. Getting my point? That cannot be revealed on its own. So got it? Understood? So you can also bifurcate them on the basis of the revealment. which can be revealed on its own or which cannot reveal on its own. Now moving on to next, talking about the next thing, that the third kind of error which we generally face is unintentional error. Unintentional error, yes, the unintentional error, this means it is an innocent and non-deliberate mistake due to ignorance or inadvertence, right? So something which has not been done intentionally, The next is intentional error. The next intentional, it refers to deliberate and purposive errors. That means something has been done by keeping in mind a particular purpose and intention. Example is fraud. Right? Fraud. You will come to know about it as fraudulent financial reporting. We are going to discuss about on the same topic, but that is going to be only a minute thing. So intentional and unintentional. The error which took place intentionally is intentional error, otherwise it's unintentional error. Got it? Should I go ahead? Now moving on to next. Please pause. Now moving on to next. Point number 5, which talks about unconcealed errors. These kind of errors refers to, it is similar to unintentional error though. That means the error is sustained on basic review of accounts. While doing a basic review, you will come to know about it. So it's okay. This is again an unintentional error. Leave it. So we are going to straight away move on to error affecting trial balance. Error affecting trial balance. There are going to be some of the errors which are going to affect the trial balance, and after that, so this is basically, if I talk about one-sided errors of commission or omission. Throughout a difference in trial balance. Right? Understood? Got my point? There are some kind of one-sided errors which are going to throughout a difference in trial balance. So something which is going to affect the trial balance, those are the errors which are going to error affecting trial balance. And there is something error non-affecting trial balance. Sir, what is error of commission and error of omission? I am going to give you guys a detailed study on this. Error not affecting. I don't know what's going on. Not affecting trial balance. So what does this mean to? This means that there are few kind of errors which are not going to affect trial balance. Simple. This may include, for example, you can say it as compensating errors. Errors of contingent liabilities. This can be those kind of things which are not going to affect your trial balance. Right? Now, moving on to next, talking about those kind of errors which do forms a kind of headings for you guys. And those are going to be important as well. Should I go ahead? Please pause. Now, okay, let me draw a table because this is going to be a huge one for you guys. Yes, it is going to be a huge one for you guys. Yes. Well, now let's do one thing before proceeding further. Turn out your notebook into landscape mode. You know about landscape mode? It's a rectangular mode, na? Turn out your notebook into rectangular mode. Now, we are doing those kind of things in such a way so that the difference between can also be feasible. You will understand the topics, moreover you are also going to learn about the difference between among them. So the very first is going to be error of commission. Errors of commission. Sir, do we need to write basis? No. You need a scale though. You need a scale to basically make proper lines between them. And then it's error of omission. Error of omission. Then it's error of principle. So we have been using these terminologies from so long, and I have not explained even a single word to you guys. And then it's compensating errors. Compensating errors. There is nothing known as compensation errors. I have just used it because I have written that previously as well. So errors of commission. Errors of commission, that means a transaction which is recorded, a transaction which is recorded wrongly or incorrectly. Wrongly or incorrectly. Incorrectly in books. A transaction which is recorded in a wrong manner or in an incorrect manner into books of account is known. Into books, not books of accounts. I am talking about just books. Error of commission, error of omission, that means it is a particular transaction. Particular transaction is not recorded, either wholly or partially. Wholly or partially in books. In books. So what is the difference between this is recorded and this is not recorded? Either the total transaction is not recorded, or either half of the transaction, or you can say a part of it, is not recorded. Got it? Got my point? You got my point? Now moving on to next. Or else error of principle is transaction recorded in wrong manner. In wrong manner. So this is all about the rectification of entries, which you guys are much more familiar about this. That what was supposed to be debited, you have credited it, and what was required to be credited, that has been debited. Just pass a rectification entry into in a wrong manner, or you can say incorrect manner. Or incorrect manner. Right? Now what is compensating errors? Compensating error, an error which is counterbalanced, by another error. And moreover, that is not disclosed by trial balance. Not disclosed by trial balance. Not disclosed by trial balance. That, I mean, you have done an error and that error has been balanced by another error. And though there is no such effect which is over there at trial balance. So done with the noting part. Should I go ahead? Now moving on to next, talking about the next thing. Then if I am going to write down the basis for this, the bases are going to be particularly what is the meaning. Right? We have explained the meaning of everything, or else you can write down the definition, meaning, whatever you want to write. So these were particularly the meanings. This has been recorded, but this has been recorded incorrectly. This has been not recorded, either some part has not been recorded or the whole transaction is not recorded. Over here the transaction has been recorded, but that has been recorded into a wrong manner. What was supposed to be debited, that has been credited. Over here there is an error which has been counterbalanced. That means an error has occurred, but that has been counterbalanced just because another error has occurred, and you have no basically effects on your trial balance, which shows the balances of everything. So basically that does not have any of the effects. Now moving on to next, there are so many, talking about the types types when it talks about EOC, that means error of commission, error of omission, errors of principle, and compensating errors. So talking about, there is the very first thing, this is all about posting error. Posting error refers to that you have used a wrong account has been used, or wrong amount has been used, or else wrong side has been used, right? How this has been used, that you basically the transaction requires Mr. Ram to be debited and that has been credited, right? So wrong side you have used, amount was supposed to be 1 lakh rupees but that has been posted as 10,000 rupees. Wrong account has been used, that means income account was supposed to be there and you have debited the same to expenditure. Now moving on to next, talking about the rest of the things, that is, there is one more thing named as casting error. So what does casting error over there refers to? That means wrong totaling or balancing. Particularly that kind of an effort which is totally a human error and known as, there is some of the issues when it comes to the calculation part. So then after that, carry forward errors. You guys understood the same? There are some errors which are required to be, which are carrying forward a wrong amount, or either they were onto the wrong side, so that's thereby they think these things have been carried forward again and again. Now moving on to next is duplication errors. So what is duplication error? Duplication error refers to posting same entry twice. That means you have posted the same entry twice. First of all, you have posted the entry into books, and after that you have posted the same entry into ledger as well. Right, the same has been posted twice. That means it's a duplicate error. So in spite of having the sales from one particular person for worth rupees, you can say 1 lakh, that has been posted as sales of rupees 2 lakhs just because of duplication of entries. Now EOO refers to the errors of omission. In this, what you will find the types are there are basically of a couple of types. That is partial omission. Now partial omission over here refers to that one of the aspects of transaction. So every transaction do have a couple of aspects, debit and credit. So one of the aspects of transaction is omitted to be recorded, is left as omitted to be recorded. And the next is total omission. When it refers to the word total omission, what does this refers to? That means both aspects of transaction are omitted to be recorded. That means you forget to put both of the aspects, neither the debit one, neither the credit one. Both of them have not been recorded, are omitted to be recorded. Got my point? Did you got what I meant to say? Now, there are basically two aspects. Errors of principle. Errors of principle do have two types of errors. That errors which do not affect profit. Errors which do not affect profit. Just like wrong classification. Example, wrong classification of asset or liability. Of assets or liabilities. There were some of the assets which were termed, or there were some of the liabilities which were secured liabilities, or there were some of the assets which are secured and unsecured. or liabilities. Let me give you an example of the basically you do know about a lot of things. There are some long-term liabilities, short-term liabilities. The long-term liability that has been classified into short-term liability, and short-term liability we have written that into long-term liability. So that just there is a change of the classification. The entries are over there. The entries are over there. Just they have been posted under the wrong headings. Okay, as they have been posted, so they are not going to affect the profit. The next is errors which affect profit. Errors which affect profit. So there are few errors which are going to affect the profit as well. Now, errors which affect profit, that means there was treating, okay, so what you have done, there was a rent which has been paid. Rent paid. You are required to, this is your expense. This is your expense, and you treat it as that somebody has paid a rent to you. You have treated this as your debtor. So this is definitely going to have an impact on your profit. This is going to impact your profit. Right? This was my expense, although I considered this as my earning. So this is definitely going to affect my profit. So CE, compensating errors. Now what does this mean? Compensating errors are particularly, you are going to write down a couple of lines about it. There are no such classifications, but it may be classified as it may affect profit, it may affect profit, or it may not, affect profit. This may affect profit, or it may not affect profit. It's not effect, it's affect. It's a, okay? Effect is something else. It's a affect. It's not effect. Right? So got it? So there are basically different types of errors which are classified as per the subsequent headings. Got it? Now moving on to next, talking about the next thing. Errors of commission. When it comes to errors of commission, what is going to be the effect on trial balance? Write as that effect on trial balance. Effect on trial balance, first of all, it's errors of commission, errors of omission, errors of principal, and compensating errors. Talking about one-sided errors, in errors of commission, one-sided errors cause difference in trial balance. Definitely the balance is going to vary. Cause difference in, but two-sided errors will not cause any difference. Two-sided errors will not cause difference in trial balance. Will not cause difference in trial balance. EOO, errors of omission. Now, what does it mean? There are two kinds of omission. One is complete, and that means one is total omission, one is partial omission. Talking about complete omission, if we talk about the complete omission, that you have basically forgot to enter the total entry, complete omission will not affect trial balance. Will not affect trial balance. Will not affect trial balance. But one partial omission is going to affect it. Partial omission will affect trial balance. Will affect trial balance. Will affect trial balance. Okay? So one-sided errors, they are definitely going to make a difference in trial balance, and just like that the partial omissions, they are also going to make a difference into the trial balance. But when it comes to complete omission, that the total entry, the total transaction that went missing, then in that particular case it is not going to affect the trial balance. EOP, errors of principle, that means these errors will not affect trial balance at all. 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 But when it comes to compensating error, it is again will not affect trial balance. Will not affect trial balance. Okay, got my point? You guys are getting my point? Yes, please. Now, what is going to be the effect on profit? Should I go ahead? Yes, please. Yes. Now, the next is effect on profit. Effect on profit. So, the effect on profit, that is going to be for errors of commission, errors of omission, errors of omission, errors of principal, and compensating errors. So now moving on to that errors of commission, they are not going to have any, errors of commission, they will affect profit. They will affect your profit, as these things cannot be generalized, so they are going to affect your profit. Errors of omission, if the entry has been posted as basically a partial one, and talking about errors of commission, if the entry is one-sided error, then in both of the situation, profits will be affected. Profits will be affected. Profits will be affected. Now, moving on to next. Errors of principal, if it involves income and expenditure. Involves income and expenditure. If it involves your income and expenditure account, then definitely profits will be affected. Profits will be affected. Did you get my point? Yes? Okay. Now, compensating errors. Compensating errors, in that kind of a situation, an entry has been posted, an error has been posted, and simultaneously another error has been posted, which has made the counterbalance of the previous one. Previously, you have debited an amount, and into the next error, you have credited the same amount, so the effect has been nullified. So that's why this is in this particular situation, profits will not be affected. Profits will not be affected because that has been counterbalanced by the very next error. After that, talking about detection, that how you are going to detect them. Will this be easy for you, or this is going to be too much difficult? Errors of commission can be detected through normal audit. Can be detected through normal audit. Okay, if a normal audit is going through, whatever the normal audit procedures which are over there, if that is being carried on, great. The audit can be, the errors can be detected. Example, vouching, reviewing, posting, checking, casting, all of these things by a normal audit procedure. These errors can be found. Got it? Now, moving on to next. So, if you want to find out an error of omission, can be detected by regular audit. Can be detected by regular audit. For this, you need a regular audit. That means a continuous audit is required at your end. Now, moving on to next. So, errors of principal they are detected by audit procedures. What are these kind of audit procedures? We are going to study about them as well. But audit procedures do involve about the ledger scrutiny, or a comparison of financial statements, analysis of financial statements. By these kind of things, adopting such kind of audit procedures, errors of principles can be detected. So, and compensating errors, they are actually very much deliberated and they are difficult to detect. But can be detected by audit procedures. Got it? Yes, please. Now, my dear ladies and gentlemen, we are going to end up the classroom right now over here, and into the next class I will tell you guys that what does it mean by frauds and how many types of frauds are over there. And we are going to cover about those kind of aspects. For the time being, bye-bye. Take care of yourself. We'll catch you in next class. Bye.